What's up guys, Florida Mortgage Gal here, and today we're talking about shopping for home insurance. How do we do it? Let's get into it. All right, so home insurance. Where does this fit into the home buying process and the home ownership experience? So when you're going under contract for a home, one of the pieces of the contract that you negotiate is something called your home inspection period. That's the time where you hire a third-party inspector to check out the house top to bottom to see what's going on with it. Depending on the age of the home, you might order something called a 4-point inspection, a wind mitigation inspection. If you are a veteran purchasing a loan through a VA loan, you might also have something called a WDI or WDO, basically a termite inspection. You can get whatever other inspections you want. Sometimes people get inspections of pools. They'll get the termite inspection even when they're not required to have one done. If you have your own separate septic and water, then you'll go ahead and get a well test and a septic test, things like that. Once you get those reports, talk to your lender or your realtor. They'll be able to give you the names and numbers of some reputable insurance agents in the area. Then you can go ahead and send over the reports that the home insurance agent needs. Now, side note here, do not send them more reports than you need to. Whatever reports they need, send them the bare minimum. We don't need to overshare with the home insurance agent. From there, you're gonna take all of the quotes that you get back and compare and see what is the best coverage for the least amount of premium. Now, a few things to keep an eye out here. If you're looking at a single family home or a townhome, basically any home where you're the one in control of the roof or you're the one responsible for the roof, you're gonna be getting something called an HO3 policy. That's gonna be the entire home. Now, when you're getting a condo, you're gonna look for something called an HO6 policy, which is basically a glorified renter's insurance. It's for the contents of your property, just from the walls. Now, in both of those policies, there's a few things to look at. There's two main types. There's the actual cash value and the replacement cost value. And you'll notice that the premium amounts are different depending on which one you get. Now, for the replacement, you're actually going to be getting the full price of that item back. Now, for example, if you have the replacement coverage in your home insurance policy, if something happens to your couch and the couch was originally worth $5,000 and now, you've had it for 10 years, the depreciated value maybe is $1,000 for the couch. Congratulations, you have the replacement coverage. So they will go ahead and give you a brand new couch for the value of what you bought it for. Now, talk to your agent. They're going to go over this in much more specific terms. And of course, I'm talking in generalities and also as a lender. So talk to your agent because they're the expert in this space. But the short answer of it too is on the actual value, they're going to give you the depreciated value of your items. Now, there's a lot more to it as well. Part of why I say to speak with your agent is because they're going to give you the requirements. Maybe you have to register some of the items in order for them to have full coverage on them. If it's rare jewelry or something that's a little bit more out of the box, they might even ask you to go ahead and get an appraisal on that item in order to be able to give you the full coverage for that item. But anyways, so you have your HO6, your HO3, you have your actual cash value, your replacement cost value, and you've got your multitude of quotes out there. Home insurance is something that you can always shop over the life of the home. If you do something to improve the home, like say a new roof or you put, hurricane shutters all around your house, those are times where you should reshop your insurance. Now, the insurance agent might ask you to get a new inspection report in order to prove that these things were done, but the extra couple $100 on the inspection report should save you a couple $1,000s a year, depending on what upgrades you have done. So always speak with your insurance agent and they can give you a little bit more guidance on if it's worth it or not to add certain improvements in order to get the payoff on your expenses on the home. Anyways, when you pay off your home, if you don't have a mortgage on the home, you don't have to have home insurance. There's a lot of people out there that are self-insured on their homes, but they're the ones taking on the risk. So instead of paying someone else for a policy every year, they're setting extra money aside because they're the ones that are going to be insuring their own homes. However, not everyone has that luxury to be prepared financially, so a lot of people, even without mortgages, will go ahead and get the insurance policy for that extra peace of mind. Let me know down in the comments, if you don't have a mortgage on your home, are you still paying for insurance? Hope this video helps some of you out there. Take care. Bye-bye.